Hello, Rocky Outcrop practitioners. Welcome back for more Bitcoin technical analysis with me, your pal, Rocky Outcrop. And in today's episode, we'll be checking out where we've been and where we're going with the Bitcoin prices as ever. Let's roll those intros and get on with the charts. Hi. Just before we dive into the Bitcoin chart, I wanted to say, are you interested in the coronavirus and how it's wreaking havoc across the world? It's really demolishing economies. So if you are interested in that and you want to know how Bitcoin and the dynamic about it and everything else, then I highly recommend watching this video by TradeSpotting, which I've linked in the description and it come up at the end of this video in the suggested videos. Okay, so on with our program for today. Thanks very much for joining me. Okay, back in the charts, and we've got Bitcoin versus the US dollar 24-hour Bitstamp chart up here behind me, all around me. And let's open up this tab and see what the current price is. Well, it's 7775. Oh, it would have been nice had it been 7777, and then we might have got a little prize and ching 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 payout. Oh well, better luck next time. And where is the price? What have we been doing? What's going on? Well, just generally, broadly speaking, we're operating below the 618 area on this Fibonacci retracement, and that of course is around this sort of $8,000. So we're below $8,000, as you know, what with the prices being 7775. But the reason that's significant, of course, is because of this 618 Fibonacci retracement and because of that sort of round number of 8,000. So we've been waiting and hoping and looking for the prices in terms of the sort of the overall bullish scenario to, if we go down to 4 hours, we can see it clearly, to open and close 4-hour candles up above this green line here, denoting that 618 Fibonacci retracement, and of course around about that $8,000 level. And we've not been able to do that yet. So let's hope that we can do something about this over the next couple of days, or let's look and see if we could potentially have some more downside. Actually, before looking at the oscillators and whatnot on the 24-hour chart, I suppose we'll look at them in just a second here, but you can see that we've been still bound by this channel, which of course has still got lots more downside available for it, and we could bounce around here for a while and then even come down towards the 786 Fibonacci retracement area. Is there anything else in around this area that's been giving us support? Well, you can see if you look to the left that there is in and around where we had our inverse head and shoulders. Now if you look towards sort of where the necklines would be, say for instance here, then you can see that the prices have come down as far as that, around about that 7,500, 7,600 number, and then bounce back up from there. And I suppose you could kind of think that in and around where we had this gap here, which of course is also, I can just stretch this box right over possibly, can I? Nope, I'll leave it for now. You can see though that if you just imagine it going across, so that's where we've got this neckline here, and it's a little bit more kind of obvious in a way if you look at this wick and this wick here on the CME charts, where that neckline would be about, and that's been kind of operating as support, whereas over here in the spot prices, there's more of a slope to the whole thing down to the right, of course. Anyway, let's then look through. So what would our downward side targets be, and how would we know that we're on the way there, I suppose? Well, if we were to open up any sort of decent sized candle, of course, the 4 hour and whatnot, in and around this 7,600 area down here again, then I'll not go down the 4 hour to show us again, but just down here, then I would of course be looking down here towards the 7,280 number or so for the potential turnaround, 7,300 or so, give or take. That's what I'd be looking at, and of course then we would know that we were potentially on our way there by breaking through this neckline, and things would be quite kind of bad there. We'd have undone all of the positive move that we've had since we were down in this territory. And if you remember back to when we were here, actually before coming up here, so like around about December and the start of January, before actually doing the upward move, then you'll remember that was off the back of a long sort of 6 months spent just trending down the way. So if we come back down here, then we're back in the party, looking at rejoining on with that trend again. Now we do have a channel, I suppose, could maybe bring up the channel from the past if it's still there. Scroll right down past all this stuff. Is this maybe it? Let's see. No, not seeing a channel appear there. Maybe the channels actually maybe just don't work on my chart anymore for some reason. I have no idea why. Anyway, we did have a big old channel coming down here, and if we were to draw something roughly in here to look for it, this is obviously quite above where the channel would be, and you can see that there's quite a distance before we'd rejoin back into that channel again. So there's that, but of course that leaves an awful lot of downside potential for the price to move down into before it even get back into that sort of downward trend area there. So I can look down to that 6,500 level for the next level of support, and of course we know that anyway from the Fibonacci retracements coming in around there anyhow, and you'd be looking at 100% retrace at that stage, and of course things would be pretty sticky at that point anyway. Lots of trading to be done in between times. Let's take a wee quick look at the oscillators, and you can see then that the story from yesterday remains the same. Of course, if this here low is looking at the downtrend, looking just in this channel here really, and then comparing that to the oscillators down below, you can see that when you look to the downsides, that just here at the end on the stochastics, which is this one I'm pointing at now, that there's a sort of upward trend here, and on the MACD there's a sort of upward trend here, while the prices are trending downwards. So there's a little bit of bullish divergence there across those two, but on the RSI we're not seeing that. We're still just sloping on down the way, and it's this has been the case from over here. We've got a sort of general downward sort of trend, and we would be nice to obviously have a sort of generally upwards trend. So we are looking for this to turn around before we can sort of start getting our hopes up, and we'd see things happening along the way, of course. So we'd get up towards this moving average, which is on the RSI. We'd have to sort of compete with that and get above it, and then we'd have the edge of the bearish control zone and the neutral line all coming up. So we'll keep an eye out for that over the coming days if there is some upward side, and we'd also see that happening in around about these price levels of the 618 at that 8,000 or so level, and then where we've got this magnolia line coming in here, which is the 236 of the Fibonacci retracement from June down to December. Now, what's so significant currently with that price line just right here in that 8,500 sort of price point is that it means that we've undone that Fibonacci and it's no longer valid, in which case you'd be looking back down towards the lower targets yet again, for instance 7,050 and 6,500 if in the longer sort of term, if that were to just keep going. So we'll bear all that in mind. Of course, we did fill the gap on the CME like we pointed out, and that's good. What else is this here? You might be wondering. I've got rid of the VPVR for today's episode and I've replaced it with this thing down here. I've not changed the colors or the settings on it, it's just out of the box. And what is it? Well, it's the DMI, the sort of directional movement indicator or index. Directional movement index, yeah, and it comes with a couple of different things in here, and we'll not go into too much detail on this. If you like this sort of indicator yourself, you can check out videos about it online. I'm sure there's tons of it. In fact, I've got a random web page open, school.stockcharts.com. Okay, that's not a random web page because we've had stock charts featured on the channel before. Anyway, yeah, I'm just going to sort of show you a couple of things about the DMI and how you can use it here, but thinking, I don't want to overcomplicate this video. Really, I'll just leave that, in fact, and just kind of say, well, if we look at the DMI here, we can see that the this red line, which is the ADX, is actually moving up in the upward direction, which is kind of shows that the trend is strengthening, and it's above the 20. So you can start paying attention to it. Really, is sort of the rule of thumb there. It's strengthening, and this orangey line here, which is the minus on the directional index, is moving up the way as well and diverging away from the blue line, so they're spreading out. So which means that the negative trend is actually the strength of that is increasing. So really overall, we've got quite a bearish picture when you look at the RSI and the sort of the DMI showing sort of more downside probably, and only sort of faint hope coming in on the stochastics and on the MACD, and that's dependent on the price action itself moving towards the upside in order to sort of make these things even mean anything, and they might just continue to not mean anything as the price trends down. So let's just look down a little bit towards the 4 hour and see if there's anything which could sort of give us a little bit of hope, I suppose you could say, in the meantime. And well, in terms of this DMI, it's a different picture here. You can see that the negative, which is this orange one, has crossed over the ADX, which is a good thing, I suppose. And it's coming down towards this blue one. We want to see these crossing over, and of course, the trend strength still low is very much high, but maybe it's up towards the higher zone where it could start to look to turn around there and maybe become overextended. But there's still plenty of room left for this. And as you can see, just at the very end there, they're actually diverging a little bit further. So maybe this will just continue to slope on down, which it seems kind of like there's a lot of risk here at the minute. This is basically essentially right now a no trade zone, really anyway, because when you look towards the 4 hours and you see that here on the RSI, the MACD and the stochastics, that throughout this little period here, you're starting to get this bullish divergence. Well, of course, these aren't lowers; these lows aren't actually lower, but they're the same sort of height, and you've got the upward slope there. So we'll call that Class B bullish divergence. So there, I would certainly say that this precise point here is one of those no trade zones. It could kind of go either way. What way am I leaning for? I'm actually leaning towards the upside just here in terms of this zone here, and I'd be looking back towards that 7,970 area. But I'm not a financial advisor. None of this is financial advice. Oh, I see the price is 778. Maybe it flicked to 777 when I wasn't paying attention, and I missed out on that cash jackpot payout bonus. Oh well. Okay, so I think that more or less covers things up for now. That kind of just to give us an impression of where we could potentially be going. I mean, if we're looking at looking for other sort of signifiers, the volume is still just actually kind of increasing overall as the trend's going down, which is not particularly good for yawn bulls out there. There's that divergence that we spoke of, but of course you can have divergence all the time showing up on charts, and it really doesn't make much of a difference. And if you're actually looking towards the actual bottoms and you want to make an actual statement about this here really and be sort of brutally sort of honest and clinical about it, this here's the previous low, and this and you can see then if you compare this point to the current lows that we've had, which is this point, and this point, they're actually convergent. There isn't divergence there really. So that's just really kind of trying to be particularly hopeful by looking at the very last tail end of this thing here and saying, oh, overall the signals, the technicals are kind of telling me that there's more downside in store. And of course, my opinion is that we'll turn this around and go to the upside. But that's kind of got based on some of my own sort of human being irrational elements there. And I have to point out the fact is that essentially, other than the fact that we've come down to the bottom of this channel, and that in channels you tend to go back towards the upside, there isn't anything really particularly positive to point out. Like little things like we've filled this gap on the CME charts, but we've still not actually done anything really positive that we can really point to and say, look, the things are turning around. There's just this tiny little emergence of potentially, this low here and this low is certainly lower here, and you can see that there's this bullish divergence just here on the 4 hour. Now, is that enough to write home about? I wouldn't say so. It is giving me a little bit of hope, and it is probably what's pushing my opinion towards the upside, just in terms of the next wee while, possibly go back up here, test this level at the 21 EMA and that sort of thing. But I'm not actually expecting this to sort of turn around, hugely based on the technical information. And that's going to have to leave it there for today. Thank you so much for tuning in, liking, subscribing, all that good old crack there. And I'll see you in the next one, which is tomorrow, because I make these videos daily. Thanks very much for being a Rocky Outcroptician. I'll see you next time.